What's good, my stock market homies? It's your boy Kevin. This is Touchdown Trades. In today's video, we're going to be looking at my personal growth stock portfolio, my personal investing account, and see what I'm holding and how the account has done over the last few weeks. You guys know that I'm primarily focused on investing in growth companies. I like looking for companies that are growing, they're the future, they're disruptive, they're innovative. That's what I like investing in personally. And we all know that these stocks have been crushed over the last few weeks. EV has been crushed, tech's been crushed, renewable energy has also been hurt. So obviously I'm holding a lot of these stocks in my portfolio. So the portfolio has seen a little bit of a downturn. But I have a few strategies that I use that have absolutely saved me from my account getting crushed, and we're going to be going over those strategies as well, and we're going to be talking about my top stocks that I'm currently watching and looking to buy for April of 2021. Let's break it down. Let's get it. All right, I got my Webull account pulled up here, guys. Let's break down what I'm holding, how it's done, and a few strategies that I use to protect my account from downside risk during volatile times like we've seen over the last few weeks. But before we get started, go ahead and destroy that like button for me. The like button is not our friend, and we must destroy it. All right, so here is my account. Currently holding $33,000, almost $34,000 in the Webull account. By the way, if you want to get 2 free stocks from Webull, that's free money, use the link in the description, open up a new account. It's the broker that I'm using for both the small account, the account we're looking at here, and my larger investing account. I absolutely love Webull. All right, so we started this account last year, the small account challenge, with $2,000 in the account. And you can see that we have steadily grown this account through 2020 into 2021. It was growing. The growth was parabolic. We were experiencing exponential growth from 2,000, 3,000, all the way up. We hit highs of 38,000 in this small account. Now, here is where it got interesting. Over the last 3 months or so, we were steadily growing, and then we hit a top at 38,000. And right here, this is the last couple of weeks. That is the pullback. We are currently down $4,177 or 11% on our open positions. That was the volatility that we have seen over the last few weeks, with EV getting hurt real bad, with renewables getting crushed, with tech stocks falling. My portfolio is primarily focused on growth, so obviously I'm going to see a drawdown when we see those type of stocks get hurt. So let's look at my current holdings, what I'm currently holding in the account, and we'll talk about how I took my account up a few 100% over the last few months and how I protect myself, because I should be down more than 11% on my holdings. All right, guys, so you can see my holdings over here on the right side of the screen, and we have a daily chart over here so we can see what stocks are my biggest positions. And right now, VJET, ticker VJET, is my biggest position. I own 750 shares for a market value of almost $12,000. So that is my biggest position in this smaller account. It's taking up almost 40% of my portfolio. If we look at VJET's chart, all right, so I have the daily chart for VJET pulled up, and let's talk about my thesis on this. It's both a fundamental investment for me, meaning I like the business model, I like the company, but it's also a technical trade for me as well here with VJET, because number one, I like VJET as a business. They are severely undervalued compared to the 3D printing competitors. Their revenue price to sales ratio is extremely low. I think 3D printing is going to experience massive growth over the next few years as a sector, and I think VJET is too cheap based on those fundamentals. All right, so VJET made this huge move up when NNDM was getting hyped up. Nano Dimensions, another 3D printing stock, was getting hyped up. VJET ran from sub $10 per share all the way up to $40 a share, and then has since plummeted back to earth. So in the private Discord chat, I alerted this out that I was buying VJet. If you want to come trade with us, that will be the first link in the description and you can join the private Discord chat. So right back here, VJet was trading at $17.10. Right here, I opened a position. I bought it first at $18 and then I added, giving me an average price of $17.10. So my average price is $17.10. The thesis on this VJet trade is that buyers are going to be coming back into tech. 3D printing is going to have a ton of buyers coming into it, and I wanted to be in the position before that started to happen. We also have support right here at the $13 area on the daily chart. So not only is it a fundamental trade, but the technicals are also lining up. We'll be looking for this area to hold and for VJet to round back out. I think this is a $30 stock today, and that's what I'll be looking for. That's my price target on this position, $30 per share. It's no secret that I am a big believer in the future of EV. Right? I'm a big EV investor. That's my favorite sector to invest in. And I have been buying the dip on Hyliion in both my small account and my large account, and it keeps dropping. And I keep adding, and I will continue to add as long as it keeps dropping. So let me get this chart set up here, and we'll take a look at my Hyliion investment and where I think this will go over the coming months. So I started a position way back here when it gapped down. I think my first buy was above 19, and then I've been slowly adding on the way down. And this is how I never get killed. Right? I can keep adding money to this position. As long as I keep believing in the company, I will keep adding to the position. You don't want to blow your load at the first good price, right? Say a stock drops 20%. You don't want to blow your entire load. You don't want to throw your entire portfolio at that stock just because you think it's a good deal, because the stock market can remain irrational longer than you can remain solvent. What does that mean? Is Hyliion too cheap at $10, $11 a share? Absolutely. But it could keep dropping before it rebounds. So you need to have more liquidity. You need to have more capital to be able to cost average down. It's common sense. So let's say I had thrown all my money at Hyliion at $19 per share because I did think Hyliion was a good deal at 19. I still do. I would not have had any capital left to add on the way down, and I would be down way more than I am now. I'm down 10% on my account after this huge sell-off. I don't care. That's great. That's amazing. I'm only down 10%. That is nothing compared to what's going to happen when we finally get that rebound. So Hyliion, I love the company. You guys know that. I think the company is too cheap based on its future revenue growth. It's going to be the bridge for Class 8 semi-trucks to get into EV. I absolutely believe Hyliion is too cheap. So it keeps dropping. I keep adding, and I will continue to add to this position. Looking forward to round back out. I'm looking for $35 per share within the next 24 months for Hyliion. That's going to be my price target. My average price right now is $14.40. I have more funds available in this account and other accounts, and I'll continue to add to these EV stocks. That brings us into the third biggest holding in this account, which is XL Fleet. And the same exact thing goes for XL Fleet as for Hyliion. The market can remain irrational longer than you can remain solvent. So don't throw all your money at one stock because you think it's a good deal and then not have a plan. Okay, so my plan, I started buying way up here near $17 a share. Actually, I think it was higher. I think it was up at $20 a share where I took my first buy. But I opened my positions with starter positions. What is a starter position? You're nibbling. You're taking a little bite initially. You open a very small position. And then if it keeps going against you, but you still have conviction in the company long term, you don't mind owning the stock long term, nothing has changed from a fundamental perspective, then you add to your position, or I add to my position. I'm not telling you what to do or how to invest, but I'm telling you what I do. So I add to my losers and cost average down. Now, from the trading perspective, I do not like to add to my losers. But from a long-term investing perspective, I think the only way to make money long-term is by averaging down in your positions. From a trading perspective, that's different. I don't like to add money to my losers, but long-term investing, cost averaging down is the key, in my opinion. All right, so XL Fleet, Hyliion, nothing has changed. I still love the companies. I still think they're extremely undervalued. But here's the other side to this. These stocks aren't going to rebound overnight. They're not going to rebound next month or 2-3 months down the road. The only thing that can help these companies is for them to come out with their quarterly earnings report and to show better revenue numbers. And I think that will happen, but we only get that once every 3-4 months, right? We only get an earnings report 4 times a year. So we're going to have to wait a while for these EV stocks to rebound. It could be a year, it could be 2 years, but these companies are too cheap. And I absolutely believe this EV dip is the stock market opportunity of our generation. That's right, I said it, the opportunity of our generation. People always say, I'm going to be buying the next crash. I'm buying the next stock market crash. I'm waiting. I'm sitting on the sidelines and I'm waiting. Well, they always miss it. But it's staring us right in the face right now here with EV. These stocks have crashed. This is the opportunity to buy, and I'm definitely not going to miss it. All right, let's move on to the next holding. Let's look at SunW. SunW, we're up a little bit on this position, not much. This is just a pure solar play. You guys know I like solar long term. I think it is going to be the future for the U.S. power grid, and not only the U.S., but the whole global power grid, I think will transition to solar. Everything can be self-contained. You're not going to have to rely on a power company give you your power and charge you ridiculous prices. We're already seeing it in states like California, Arizona, Nevada, where it makes sense from a monetary standpoint to already transition to solar. We're not there yet in other parts of the US, but the technology will improve and solar is the future. It's going to be a huge $1 trillion industry, and I'm starting to take some nibbles, some starter long-term positions in solar. One of those is SunW. Another one is iSun, ISUN. We are up a little bit on this one as well, not much, but I'll continue to add to these as well. The next position let's talk about is this FRSX. This is Foresight Autonomous. This is an autonomous driving play. This ties into EV, but robo-taxis, autonomous driving, they are going to be massive, massive business and industry in the coming years. We're going to see robo-taxis taking over the rideshare market. Uber, Lyft, they're going to be using autonomous robo-taxis. Tesla's getting into it, and Foresight FRSX is in that sector as well. So that's me just wanting to get some exposure to that sector. We bought here at $7.76. We are down on the position, currently trading around $6 a share. So we'll be looking to add to this here in the next couple of weeks, especially if we can come down towards this $5 support. I'll be looking to take another buy on this FRSX. The next stock we're going to talk about, the next position, is FRX. This is Forest Road Acquisition, a SPAC that is going to be bringing Beachbody to market. Beachbody, a Peloton competitor, an at-home fitness app where you can work out, have live instructors and classes. And I think this is going to be a much cheaper option to get exposure to the at-home fitness than a company like Peloton. And the haters, the bears for the at-home fitness space have said that once the economy opens back up, once gyms open back up, these companies like Peloton, NordicTrack, Beachbody are going to lose their customers, and I don't tend to agree with that. I think these companies will be just fine. People have learned how to be more efficient with their time. Maybe you don't need a gym membership. Maybe you can use a service like Beachbody, and Beachbody is the cheapest way to get exposure right now to the at-home fitness space, much cheaper than Peloton. All right, the final stock I want to talk about is XPeng. This is XPEV, and we bought it at $33.95, down a little bit on the position. This is me wanting to get some exposure to the Chinese EV market. You might be asking yourself, why didn't you buy NIO? The reason is I think XPeng is just cheaper than NIO. XPeng trades at a way cheaper multiple, a way cheaper valuation than NIO, but they have very similar sales and delivery numbers. So it makes no sense for me to go buy NIO when XPeng is in the same market. They're doing similar numbers, but they are much cheaper from a price to sales and just a market cap perspective. So I'm taking the dive into the Chinese EV market with this XPEV. We bought it $33.95. We're down a little bit on the position. We're coming into that support at 26. We're going to be looking for this to round back out. I think this is a $50 stock right now, and that will be my initial price target on this XPeng Motors. All right, guys, that's going to wrap up the video. Just wanted to do a quick little account portfolio update. So the way we did this, we ran this portfolio up from $2,500 to almost $40,000 in just a few months, was that we invested in these growth companies and they were super strong. We didn't hold the bag. You got to be able to lock in some profits and move that money from a company that's made a huge move to a company that you think is possible of making a big move, right? You don't want to get married to one company. That's my strategy. If I'm up 500% on a stock, I'm going to lock some of that in. Plus, we do a lot of swing trading in the private Discord chat. I encourage all you guys to come trade with me, join up with the Patreon, and get access to that private chat. It's been slow over the last month or so. It really has, but it's going to catch back up. We're going to have some more momentum coming in the market, and we're going to be waiting for that momentum. I'll catch you guys in the next video. Until next time, peace.